Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Nina Mishra.
Hello and welcome to ETF Spotlight. I'm your host, Nina Mishra. My guest today is Matt Hogan, Chief Investment Officer at Bitwise Asset Management. We're talking about the outlook for Bitcoin and crypto ETFs under Trump 2.0. And Bitwise, as we know, is the largest crypto index fund manager in America. And Matt is one of the world's leading experts on crypto. And in fact, prior to joining Bitwise, he was the CEO of ETF.com. So he's the perfect guest for this topic. Matt, welcome. Great to have you with us today.
Nina, thanks for having me, and thanks for that wonderful introduction. I'm really excited to chat.
Sure. So let's start with this remarkable first year for Bitcoin ETFs. So these are the most successful launches in history. They shattered all records. So I'd love for you to start with your thoughts on Bitcoin ETFs first year.
Yeah, absolutely stunning. You know, we thought that the Bitcoin ETFs would be successful, but even we were not anticipating this kind of response. You know, there have been more than 6,000 ETF launches in the US, and to have the Bitcoin ETFs be the largest by far is really remarkable. More net inflows than the Qs, than gold ETFs, than the original S&P 500 ETFs. It's just been an overwhelming response. And I think there are a few reasons for that. One is Bitcoin itself, right? It's worth noting that Bitcoin is the best performing asset of all time and a uniquely diversifying asset for portfolios. So I think there was a lot of demand for Bitcoin, which was in a bull market and had these unique characteristics. And then the other was what you mentioned beforehand. There was a 10-year lead up between when the first Bitcoin ETF filing hit the SEC and when we finally launched. So there was huge pent-up demand. And when you combine pent-up demand with the best performing asset of all time, I guess what you get are record ETF flows, but it's been remarkable to see.
It has been. So who is buying these ETFs? Are these retail investors mainly, or financial advisors, or institutions?
Yeah, the answer is, based on what we can glean from 13F filings, it's about 3/4 retail investors and 1/4 institutional investors, which is a group that I would say includes institutions, family offices, hedge funds, and financial advisors. Now, when I say that, I think people often misinterpret that because they think these are retail-driven or retail-only ETFs. And it's absolutely the case that there's been significant retail demand for these ETFs. But Nina, if we exclude the 75% of flows that are attributable to retail investors and just look at the 25% of flows that came from financial advisors, hedge funds, and institutions, these are still among the most successful ETF launches of all time. So we shouldn't let this huge retail interest overshadow what is huge institutional interest. My personal prediction is we're going to see the institutional portion of the flows grow significantly in 2025. These ETFs are still being approved on major wirehouses. They're still going through due diligence processes amongst major financial advisors. Just this week, I've met with 3 $10 billion plus financial advisors, which are just now greenlighting them and adding them to portfolios. So I think we're going to see that institutional demand pick up. It's already significant, but there is also a significant retail demand.
Great. Now, let's talk a little bit more about Bitcoin under President Trump's second term. So yesterday, President Trump signed an executive order. This aims to establish the US as the crypto capital of the world. And the initiative includes forming a working group on digital asset markets that will explore creating a strategic national digital asset stockpile. So some experts say that this executive order slightly fell short of expectations. So what are your thoughts? And in general, what kind of changes do you expect from the new administration? And how much of that optimism is already priced in?
I take the opposite view. Actually, the executive order exceeded my expectations. I think the crypto market is a little bit like a toddler that got 15 presents for Christmas, but didn't get one, superhero figurine and is throwing a fit as a result. If you look at the executive order in full, we went from an environment where the administration and regulators were strongly hostile and trying to cripple the crypto industry to one where its growth is now established as a national strategic priority, where investors have a fundamental right to own crypto and use blockchains, where we're putting the full weight of the government behind the growth of stablecoins, where we're going to provide regulatory clarity to this space, which will unlock, I think, trillions of dollars of development. And those are massive wins. The disappointment you're speaking to is people were hoping to hear that we are immediately establishing a strategic Bitcoin reserve and we're going to go into the market as a country and buy 1 million Bitcoin. I think that's probably too optimistic. Even talking about a national strategic stockpile is a big deal, but the broader scope of this executive order, particularly when you look at where we're coming from with gale force headwinds to where we are with gale force tailwinds, I think is a massive win. I don't think it is at all priced into the market, in part because I don't think the market realizes how repressive the previous regime was to crypto. So, when I read it, my takeaway was we're lined up for a sustained bull market in crypto that will extend likely for multiple years. So I think it exceeded expectations.
So let's talk about I saw that you released 10 crypto predictions for 2025, and some of these are very interesting. So in particular, I like the first two. You talk about the prices, your price expectation. The first prediction is that Bitcoin, Ethereum, and Solana will hit new all-time highs, with Bitcoin trading above $200,000. And the second prediction is that Bitcoin ETFs will attract more inflows in 2025 than they did in 2024. And you alluded to that a little bit because there's rising institutional participation now, and we are hoping for additional approvals from wirehouses. But I would like you to talk a little bit more about these two predictions.
Yeah, absolutely. The first prediction on Bitcoin trading to $200,000 is really premised on the basis of supply and demand. Bitcoin, particularly, unlike other crypto assets, doesn't have cash flow. Its price is set by supply and demand. We know that this year, the Bitcoin network will produce about 170,000 Bitcoin. So keep that number in your mind. 170,000 Bitcoin is the total new supply of Bitcoin. Last year, Bitcoin ETFs bought 500,000 Bitcoin. Corporations bought hundreds of thousands of Bitcoin. Governments bought Bitcoin, retail bought Bitcoin. When I look at the supply-demand dynamic, I see demand for hundreds of thousands or maybe 1 million plus Bitcoin, even before we have the US government actually buying it. And I look at supply and it's 170,000 Bitcoin and can't be any more. And economics tells us that the price goes up in that circumstance, right? You need people to sell who already hold Bitcoin. The price has to rise to encourage them to sell. So I think we end the year higher. On the ETF specific flows, there are a couple of reasons, a few of which you pointed to. One, we haven't even unlocked the wirehouses. Two, most institutions are just getting through their due diligence. But there's another factor that I think is really important, which is poorly understood, which is just the people who bought Bitcoin ETFs last year, I think, are going to double down and increase their allocations in 2025. We do a survey of financial advisors every year asking them about their attitudes toward crypto. And this year we had about 400 or 500 advisors fill out their survey. 99% of the advisors who bought Bitcoin in 2024 plan to maintain or increase their allocation to 2025. So even if no other investors come into this market, I think you'll see tens of billions of dollars of flows. And of course, I think many new investors will come into this market. So I think we could be north of $50 billion in flows by the time we end the year. We're certainly over $1 billion in flows in this week alone. And I think those numbers are going to go up from here.
Amazing. So what's next for Bitwise in terms of new products? I think I saw your filing for XRP and Solana ETFs, and recently a Dogecoin ETF filing as well. And I know that you're also planning to convert your Bitwise 10 crypto index fund, it is BITW, into an ETP. So tell us about these.
Yeah, look, I think big picture, we've entered the ETF era of crypto. We made a down payment on that last year with the introduction of Bitcoin and Ethereum ETPs. But I think we're going to see a renaissance or a major flowering of a large number of ETPs. And that's good for investors. As you know so well, what ETFs do is they help everyday investors access investments on the same terms, at the same costs, and with the same security guarantees as the largest institutions in the world. And that's been true since ETF launched. And it's true, for instance, of the Bitcoin ETFs. Our Bitcoin ETF costs 20 basis points, has full institutional custody, full professional trading, is audited by KPMG. 2 years ago, you had to be putting $1 billion to work in Bitcoin to get those kind of terms. Now you can do it with a $10 investment through your Robinhood account. That's a game changer. So I think we're going to see a large number of ETPs. From Bitwise's perspective, I'm really excited to bring multiple products to market. I think it's going to help investors allocate to this space more sensibly at lower costs and more securely. And hopefully we can get those products to market soon.
Great. I agree with you. ETFs have been a game changer for the crypto industry. Now, let's take a step back and talk about some of the basics. Particularly, let's talk about the role of Bitcoin and other cryptocurrencies in a portfolio, because I know that some investors are still curious about Bitcoin. They have taken note of its amazing performance. You said that it is the best performing asset class ever, but they are also spooked by its volatility. They love the ETF wrapper. You talked about it. But they're still trying to figure out how to approach Bitcoin and cryptocurrencies in the context of a portfolio. How much allocation does it deserve? What would you tell such investors?
I think about sitting down to like a nice dinner with tacos or something. And when I do that, I like to put a little hot sauce on my tacos. I think it makes it overall taste better. If you put too much hot sauce on your tacos, it burns your mouth and you feel uncomfortable, but just the right amount is right. And I think that's true of crypto as well. Crypto is probably one of the more volatile assets that you can put into a portfolio. But I will tell you that if you go back through the 15-year history of Bitcoin, what the data shows is if you add a small amount of Bitcoin or crypto to your portfolio and you rebalance it like you would any other asset, historically what it's done over multi-year holding periods is increase your returns without substantially increasing your risk. And the reason for that is it's not correlated with other assets, right? What drives the S&P 500 is different than what drives the price of Bitcoin. And we all know from studying the markets that adding non-correlated assets can help increase your risk-adjusted returns. So the TLDR for folks is, I think many investors can benefit from adding Bitcoin to a portfolio, assuming they add it in a small amount and rebalance it like they would other assets. My studies show that up to about 5%, Bitcoin doesn't significantly increase the volatility of your portfolio. When you get above 5%, you start to really feel that heat. So most of the investors we work with look at a 1%, a 2.5%, or a 5% allocation, and they hold it for the long term and rebalance. And that's I think, a good starting point for many people.
That's a great description, very helpful. So let's talk a little bit about some of the meme coins that created a lot of buzz. So just days before starting his second term, President Trump and his wife, Melania, they launched a pair of meme coins. These were called Trump and Melania. They surged in value and then plunged a little bit. And one ETF provider has already applied to launch an ETF holding these Trump tokens. Now, we know that meme coins don't have any underlying value, but I was interested in your thoughts on these meme coins. Are they good for cryptocurrencies in general or bad?
Yeah, I think there's a lot. Like anything, they're quote unquote good meme coins and quote unquote bad meme coins. I think the important thing for investors to understand is what you hinted at. I think of meme coins like collectibles, right? Like baseball cards or Pokemon cards. They're these cultural artifacts of the crypto culture, which is a large culture. It's hundreds of millions of people who are natively digital, for whom the internet is their primary way of interacting with the world, for whom memes matter, and they're using these coins as collectibles. But as an investor, you need to understand that particularly new meme coins that haven't been in the market for a while have very significant risks. They have risks of insider holding. They have risks of pump and dump schemes. They have risks of sort of celebrity attractions. I think that's distinct from some of the sort of older generation of meme coins. You look at something like Dogecoin has been around for 10 years through bull and bear markets. It's sustained its community. It's probably not going away. There are no insiders. It doesn't have a fundamental value, but it's a collectible of the crypto culture. And as long as you understand that, have at it. But I do think investors should be cautious about newly launched meme coins. They should understand their significant risks, and they should think of them more collectibles than traditional investments. And, beyond that, needs to make their own decisions.
Excellent points. Now, we should talk about risks of a quantum computing attack on cryptocurrencies as well, because we don't know yet whether practical quantum computers are 10 years away or 15 years away or 20 years away. But when they do arrive, theoretically, they could enable hackers to break the encryption that secures Bitcoin and other cryptocurrencies. And I read some expert opinions on this, and experts, it seems they are divided on whether Bitcoin can become quantum proof before this potential threat arrives. So what's your view?
Yeah, great question. I mean, the first thing I would say that if quantum computing breaks the cryptography that secures Bitcoin and other crypto assets, which is called RSA cryptography, the world is at a big risk, because that same cryptography underpins all military communications. It underpins all point of sale transactions. It underpins the fundamental workings of the internet. Crypto uses that same cryptography for its security. But if that is broken, we should be worrying about nuclear codes in addition to Bitcoin. The reason that's relevant is because it's so systemically important to the world. There's a huge amount of effort into developing quantum resistant cryptography. And I am of the belief that we will get to quantum resistant cryptography, and that can be applied into Bitcoin and other cryptocurrencies before these, James Bond style quantum computers are a fundamental threat. But there is, of course, the risk that we could wake up tomorrow and AIs have established how quantum computers work, and there's significant risks. But that risk would apply equally to, again, military communications, the internet, and crypto itself. And for that reason, I feel confident we'll get to quantum resistant cryptography long before we get to steady state quantum computing that poses a risk. But it's a great question.
Great. We'll have to leave it there, but thank you so much for joining us today. And also congratulations on all the success, and good luck with the upcoming launches.
Thank you so much for having me. I really enjoyed the discussion.
That was Matt Hogan of Bitwise. Let's talk a little bit about some of the ETFs that you could consider. So Bitwise offers the spot Bitcoin ETF. The ticker symbol is BITB. This has more than 4.5 billion in assets. And we know that the most popular product in this space is by iShares. And the ticker symbol is IBIT, IBIT. Bitwise Ethereum ETF is ETHW, Bitcoin Ethereum ETF. They also offer a popular Crypto Industry Innovators ETF. The ticker symbol is BITQ. So this provides exposure to crypto-related companies, and MicroStrategy and Coinbase are its top holdings. Thanks for listening. If you like our show, please leave us a rating on iTunes or wherever you get your podcast. If you have any comments, questions, or suggestions, please email podcast@sachs.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.